traders at Access Bank say investors have their focus fixed on today's 132 billion naira T-bills auction, as they also expect the CBN to conduct its bi-weekly Retail SMIS auction this week. Franklin Ebomah, Treasury Team Member at Access Bank, now joins me for more market updates. Franklin, thank you so much for joining us on the show today. Let's start with the money market and the liquidity base at this point in time. The injection from FAC payment and also the 185.5 billion naira coupon payment, as well as the 750 bond maturity. How has this impacted liquidity, system liquidity at this point in time?
Good day, David. Thank you for having me. It has actually impacted system liquidity positively. The week opened with a repo balance of about 400 million naira, which was in contrast to last week repo levels of 430 billion. As you mentioned, the FAC inflow came in and impacted the system positively in that regard. So we anticipate further improvements in liquidity going into the week with a coupon payment of about 185 billion, NTB of about 132 billion, and a bond maturity of about 750 billion naira impacting the system. So we expect this to positively affect the system. In terms of, as you mentioned, in terms of the fixed income space, it's been a bit quiet, but going into today, we have NDMO conducting their auction, where they would offer about 132 billion across various standard maturities. In our view, we expect this auction to be oversubscribed and rate closing lower than what it closed at the last auction. In terms of the FX market, the demand for FX continues to outweigh the supply. We have the INA rate and the NAFEX rate closing at about 63.44 and 462.5 naira to the dollar, respectively. So going into today, we expect CBN to intervene in this SMI and invisible window, and also towards the end of the week, we expect them to conduct their bi-weekly retail SMIS auction.
Yes. And talking about expectations now and what has played out so far, we've seen investors' interest largely on the 2049 and 2050 papers. These have been the highest yielding bond instruments at this point in time. Going forward, do you think we'll see any further move away from these particular papers? We've seen a gradual transmission from the short to mid, and then now a focus on the longer term papers.
Yes, you're correct. The focus now is towards the long dated papers with that interest, but still we have to make sure that the bid-ask spread narrows, right? But going in forward, right, we don't expect any much volatility in yields. We expect the demand to continue to increase in that regard.
And talking about what we should also expect for the rest of the week, for next week as well now, because investors are also keeping their fingers crossed. We are wrapping up the month of April. A whole lot is happening, and then we are inching further into mid of the second quarter of the year. What are the likely defining moments, or how do you think investors are positioning, going by what has played out in the last couple of days?
Well, currently now we can speak to the liquidity into the system, which is reaching about 1 trillion. So we expect a lot of rally given that liquidity, barring any significant activities, maybe like a CRR debit or in that regard. But provided there's liquidity in the system, they'll continue to be rally, and that's what we expect.